Good day, everyone. Good morning, good afternoon, depending on where you are today. Welcome to today's webinar on mastering your transition to ASC 606 and IFRS 15. My name is Vijay Ramakrishnan, and I am from Intact, the leading provider of best-in-class cloud ERP software. And at Intact, we are focused on finance. Everything we do, from our R&D to our services, to our support, is focused on providing complete solutions to the challenges that CFOs, controllers, and their teams face today. The topic of today's webinar is ASC 606, which also goes by the name of Revenue from Contracts with Customers. And ASC 606 is one of the most significant regulatory changes in decades. And one that will have significant impacts on finance, as well as ripple effects throughout the broader organization as well. And because of Intact's focus on finance, ASC 606 is a topic that we have been following for years, from its days as a proposal when it was called ASU 2014-09. We knew it was a significant change, and we wanted to make that change as easy as possible for finance organizations. The focus of today's webinar is how automation can make that transition seamless for you. This is our third webinar in a series of webinars on ASC 606. The earlier webinars provided a general overview of ASC 606, as well as a more focused look on the impacts of that change on subscription businesses. We'll be recapping some of the highlights of those webinars today, but I encourage you to visit the webinar section of intact.com and review the recordings yourselves. Today I'm joined by my colleague John Flum, and he'll be introducing himself later in today's webinar. He's going to be giving you a demonstration of how Intact can help you automate your transition to ASC 606. In terms of today's agenda, I just want to cover a quick set of housekeeping items, and then we'll roll into a summary of ASC 606 and the challenges that are going to be faced by finance teams with respect to making that transition. We'll talk about some of the changing guidelines. We'll talk about effective dates, talk a little bit about disclosure requirements, and then I'm going to hand the floor over to John, and he's going to provide you with a demonstration of Intact and the capabilities that we have in our solution to help you automate that transition. Couple of housekeeping details before we get going. We invite your questions during the course of the webinar today. We want to make this as valuable for you as possible. So if you have any questions for John or I, please submit that into the Q&A box or the chat box, and we'll try to get to the questions during the webinar. If we don't get to a question, we'll be sure to follow up with you one-on-one afterwards. We're also going to be sending you a copy of the presentation and a recording of the webinar in follow-up emails after the event. And as you exit the webinar, if you could do us a favor and fill out the survey at the end of the event, that will be helpful. If you are requesting CPE credit for your attendance at the webinar, we ask that you attend the event in its entirety, and the survey is very important so that we can get your contact details and process your CPE credit efficiently. So with those housekeeping details out of the way, let's get started with the webinar. As I mentioned earlier, ASC 606, or Revenue from Contracts with Customers, is one of the most significant changes in decades. The new standards are going to fundamentally change how your company needs to operate, with finance bearing the brunt of those changes. Now, every major audit firm has stated that the changes are sweeping and that the impacts will be widespread across processes and across systems. And because of the scale of the changes, there's wide consensus across the accounting community that the changes are pressing, that the time to start taking action is now. And to get a sense of where you in our audience are with respect to making the transition, let's run a quick poll. And so you'll see a polling question on the WebEx console, and the question is, which of the following best describes your current status around implementing the new accounting standards? Are you at a point where you have not started assessment, option A, which means you haven't talked to your auditors about it nor put together a plan or a timeline on when you'll assess those changes? Or are you more at a point where you have started investigating the standard either on your own or in engagement with your auditors, evaluating your current contract terms, evaluating whether you're capturing all the data you need to apply accounting treatments? Or are you more at a point where you've started making the needed changes to your processes? And so that would be option C. And so as we wrap up the webinar, as we wrap up the poll here, we see that about 44% of you are either in the assessment phase or actually have started implementation. And about 56% of you have not started the assessment. So about half of you haven't gotten going yet. And what we've seen is that, in the past 6 months to a year, we've seen that organizations have gradually picked up their assessment efforts and their implementation efforts, so that, these numbers have been shifting. When we asked this question, about, 6 months ago, the majority of you had not started the assessment. So if you still haven't started the assessment, now is the time to get going with that. So ASC 606 is a complex topic, and there's a lot of material on the topic. The 2 webinars that Intact has run in this series, there's probably guidance and material available from your auditors as well. This slide is a quick summary that calls out some of the important points to bear in mind as you go through the phases of assessing the impact of ASC 606 and making the necessary changes to your processes, controls, and systems. I'll touch on each of these in a bit more detail, but there's 3 key points. First is that as a result of the new standard, accounting treatments are going to change. ASC 606 replaces industry-specific guidance with a more general 5-step principle-based process for recognizing revenue. So for software companies, for example, VSOE will be going away. But ASC 606 is not just for software companies. It's going to be a new standard that impacts companies and organizations across industries. The second key point to note are effective dates for reporting based on the new standard. If you are a private company, you'll need to report according to the new standard for periods after December 15th, 2018. If you're a public company, you're going to need to start doing that 1 year earlier. And we'll talk a little bit more in detail about the reporting and disclosure requirements a little later. The third is that ASC 606 will change how you think about judgment and controls. Because we are moving to a principle-based approach, there is going to be an increase in the amount of judgment as you apply the accounting treatments. And because you are going to be increasing the amount of judgment, you'll need to take a very systematic approach to performance obligations. Performance obligations become a central notion in ASC 606, and it's going to be important in the audit process that you're able to demonstrate consistency in how you are going to apply what is now, the increased amount of judgment going forward. So let's talk about each of these topics in a bit more detail. First, let's talk about the change in guidelines. as a company that's been focused on the success of finance, a company that's been acknowledged by the AICPA as a preferred provider of financial applications, we've been tracking the evolution of ASC 606 closely. Our internal accounting experts have been engaged with the FASB to understand the consequence of these changes, how these changes are going to impact our customers. In terms of accounting treatments, there's some similarities between the current and new guidelines. In general, in broad terms, expense amortization, revenue amortization, revenue reallocation, they will all continue to be important. There's some significant differences as well, though. First, it's not a given that you can recognize revenue on cash receipt. And then speaking broadly, the changes put an emphasis on the overall customer contract, which means that firms are going to need to look at accounting treatments not just on an order-by-order basis, but more holistically at the customer level or at the contract level. And there's going to be judgment that needs to be applied here as well. For subscription companies, for example, that may mean that related add-ons, upgrades, and renewals need to be treated as changes to the original contract as opposed to creating a separate contract. And then recognized and deferred revenue will need to be reallocated for past, current, and future periods every time a contract changes. So the new guidelines also stipulate that companies are going to need to regularly defer expenses related to the contract. So the way that items like sales commissions and royalties may need to be treated are going to change. And then the most burdensome part of transitioning to the new guidelines is around disclosure and reporting. The new guidelines stipulate that organizations provide visibility into how the changes impact their results. And so, it's going to be essential to show that, and we'll talk about dual reporting a bit more. But, you look at the dates that you have for making the transition, and you look at the term of some of the contracts that you may be signing now, and you'll find that in many cases, or in some cases, you're actually signing contracts that extend into the transition period. So dual reporting is going to be especially important. So there's some significant changes coming that will impact recognized and deferred revenues, expenses as well. So with that point, now that you have a better sense of what some of these changes are, let's go to our second polling question, which is around how you are currently calculating recognized and deferred revenue from contracts. Are you doing it manually with spreadsheets? Are you using your accounting or ERP software to do that? Are you using dedicated revenue recognition software for that purpose? Or do you have some other means with which you are doing all of these calculations today? And so as we wrap up this poll, what we see here is that the bulk of you are still relying on spreadsheets to do revenue recognition, and that's going to get a lot more problematic as you go forward, because essentially, with the dual reporting requirements and with the potential need to reallocate revenues on a more regular basis, any spreadsheets that you have that are now supporting you in revenue recognition are just going to get a lot more complex. And that's not just because of the change in guidelines, but many of the software companies that we speak with are growing tremendously. So there's a growth in the number of transactions that they need to account for. Next, let's look at the topic of timing, which is when you're required to report according to the new guidelines. Private companies are expected to report according to the new guidelines for periods starting after December 15th, 2018, public companies are required to make the changes 1 year earlier. Now, as you look at these dates, it's important to remember two things. One is the scope and the scale of the changes in accounting treatments that you'll need to prepare for. But the second point to consider is the length of the customer contracts or subscriptions that you have today, that you're writing today. So here we are in 2016, and if you are signing, if you're a private company and you're signing 3-year contracts and 3-year agreements, you are already signing contracts that will need to be treated under the new guidelines and that will need to be reported according to the new guidelines as well. So there's this dual reporting that comes with ASC 606. And specifically for reporting, there's going to be 2 methods for making the switch to the new guidelines. And these either method that you choose are going to require that you have a very specific understanding and disclosure of how the changes in guidelines impact your GAAP performance. So when you hear the term dual reporting, there's 2 variants on it. There's one called a full retrospective method, requiring that all years presented be restated as if the new guidance had been in effect since the beginning. The modified retrospective method, requires recording of the cumulative effect of the new standards at the date of adoption to retained earnings, with disclosure for 2018 as to how each line item was affected. So regardless of which method you choose, you're going to need to understand at a fairly granular level the impact of the changes. And for many of you out there, you may already be signing multi-year agreements with customers that span the transition date. So you're signing agreements today that will be subject to the dual reporting requirement. So if you have active contracts that extend beyond 2018, if you're a public company 2019, it's essential that you start transitioning now. So just to recap some of the key points we've been covering, the impacts on subscription companies are significant. The new guidelines stipulate you'll no longer be able to recognize revenues immediately upon cash receipt. New guidelines require that add-ons, upgrades, and renewals be treated as changes to the original contract, so recognized and deferred revenues will need to be reallocated more frequently. New guidelines also stipulate that companies are going to need to regularly defer expenses related to the contract. And then, of course, there's the disclosure aspect, through dual reporting. And if you consider that, what we're talking about are, recognized revenues, it's going to obviously impact your deferred revenues as well. And so, your deferred revenue forecasts are going to change, and it's going to be important for auditors, investors, stakeholders to understand, as the guidelines change and as you report according to the new guidelines, why your reported numbers are changing. So with that summary of the guideline changes and the timing considerations, let's run our final polling question of the session, which is, which aspect of the new guidelines do you expect to be most challenging? Is that identifying and tracking performance obligations in a very structured way? Is that potentially reallocating revenues across multiple orders? For those of you that do discounting and we're subject to multi-element arrangements, this is going to be a complex topic. Is it correctly accounting for expenses, to obtain or fulfill the contract, or is it, do you think, going to be the dual reporting that you're going to need to do during the transition? And as we wrap up the polling question, we see that there's, a wide variation, across, the choices here. Looks like there's, people are concerned about all of these things moving forward, performance obligations, reallocations, and correctly accounting for expenses. So let's keep going. In the earlier polling question, many of you responded that you were still relying on spreadsheets. That was the top choice for how you were doing revenue recognition today. And for many finance organizations, before they come to Intact, there's a lot of spreadsheets around, not just for the accounting pieces, but for many subscription companies, especially ones that are using new pricing models such as usage-based billing, or that are getting into things like tiered pricing. There's many spreadsheets in the finance organization, on the billing side, that are being used to calculate invoices and those kinds of things. And as many of you indicated, a lot of you out there are still relying on spreadsheets to do the accounting piece and the revenue recognition. And we hear a lot from, growing companies that are, relying on spreadsheets, again, to do deferred revenue forecasting as well as billing forecasting. So even before you consider the impact of these guidelines, many of you have, a vast array of spreadsheets you're dealing with. And then when you add to the fact that there's a lot of business growth, and the change in guidelines, right, having to report and having to do more frequent reallocations and having to, accurately tie expenses back to the contract, there's this huge scope and huge potential for, the volume of spreadsheets in the organization to get even worse than it is right now. And so if you've already got spreadsheets that are part of your process, as you look at, making this transition, continuing to use spreadsheets to manage your accounting, in addition to doing, your billing and forecasting, it's going to be extremely, extremely burdensome. And so, as I said before, the ASC 606 was a change that we had been tracking for years, and we knew that for companies that were still relying on spreadsheets, this could be potentially, the straw that breaks, the camel's back, if you think of the camel as spreadsheet-based processes. And so what we did was, we brought to market Intact Contract and Revenue Management. And the goal of Intact Contract and Revenue Management is to make the transition to ASC 606 as seamless as possible, and do it by providing deep, deep automation for all of these new complexities that are coming from ASC 606. And let's recap those really quickly ahead of John giving you a live view into some of these capabilities. The first thing that we're giving our customers the ability to do is to take a contract and apply both the current and the new revenue recognition simultaneously. So understanding at the contract level, the deferred revenue, the recognized revenue, the billed revenues, unbilled revenues, that is, extremely valuable, because applying dual reporting at the contract level, we can then roll it up at the aggregate level and provide dual reporting of results according to both the current and the new guidelines. And this is useful for two reasons. One is you can begin to understand how the changes in guidelines are going to impact your reported results. And we've talked to some companies who have thought about changing the way they write their contracts, or what their discounting policies are, in order to really figure out how they want to deal with those things, so that the changes in the GAAP results are what they expect them to be. But the second aspect of it is it's a regulatory requirement, right, to do that dual reporting. The second thing that we have done, in addition to that dual treatment and reporting, is provide a way to link specific expense items to the contract. And by doing this, it's a great step forward in being able to automate the amortization of expenses in line with how you recognize revenue from contract, if that's what you choose to do. If that's based on the way you write your contracts and the way your processes are structured, and after discussing this with auditors, you have the option to link expenses to the overall contract for amortization. But also the thing that we've done that's very special in Intact is deliver a contract-driven architecture and a contract-based architecture. One of the things as you get to know ASC 606 a little bit better is you'll see that the notion of performance obligations are very central. And it's going to be really important for the audit to track your performance obligations, apply accounting treatments consistently, and demonstrate to auditors that the performance obligations are being tracked and that the treatments are being applied consistently. So what we've delivered with contract and revenue management is a contract-centric architecture, contract object that becomes the focal point for organizing performance obligations to handle all of the accounting, but it's also the same contract that drives billing as well. And so it's a very unique architecture in the industry, and we've done it this way to provide really a seamless solution to all of the complexity that subscription companies face by putting the customer contract at the center of the architecture, so you can track all the performance obligations related to a contract and manage those through the complete life cycle. Use the contract to drive billing. Use the contract to drive your revenue recognition and your expense amortization according to both ASC 605, today's guidelines, and ASC 606, the upcoming guidelines. Use the contract as the single source of truth that drives your GAAP reporting, that drives your billing and deferred revenue forecasting, but also drive reporting into SaaS metrics, operational metrics that give you a forward-looking view into how your business is going to perform so that you can really make your financial future predictable. And we've built a solution in a way that seamlessly integrates with Salesforce so that the whole contract workflow can start from Salesforce where your sales operations, and your customer success teams live. So if you choose to, you can start contract workflows in Salesforce, or you can start them in Intact. You have the option, but also to provide really these deep capabilities around accounting, because this is a topic in an area that Intact has focused on really on behalf of our customers to make all of the accounting as seamless as possible. And so what we've provided is a solution to the accounting complexity that's coming up, but also to complexities around reporting and billing that many growing subscription companies face. And so with that introduction, what I wanted to do at this point is hand the floor over to my colleague, John Flum. And what John is going to do is provide a live look into some of these capabilities that are going to help you manage all of that complexity going forward. So John, the floor is now yours.
All righty. Thank you very much, Vijay. So as we go ahead and transition the meeting over into demo, just a brief introduction. As Vijay mentioned, my name is John Flum. I'm a principal sales engineer here at Intact. 6 years with the company, but 20 years overall in financial accounting and related software, CPA and accountant by the earlier years of my career, who just found myself embroiled in software projects and went ahead and turned that into my full-time career about 12 or 13 years ago. So going to go ahead and take you through how it is that Intact is really going ahead and solving this transition to 606. And that's really the vital stage, right? You know, the transition piece is the grayest area of all this. So getting ahead of it and being able to manage it today is what we find key. You know, what I've said to folks is all the things that Vijay outlined around managing spreadsheets and the like, that's what you're doing today in your full-time job once. Never mind if somebody asks you to go back and do that for 2 or 3 years prior. You know, folks are busy enough as it is, never mind being asked to redo your job time and time again. And so as we go ahead and transition into the Intact application, what we're really talking about is all those pieces that Vijay talked about around managing dual recognition, managing the expenses, the related reporting under dual methods is really just encompassed under one single area of Intact called contracts. But it's also that functional workflow that you're going to have around, you know, simply getting the invoices out the door to your customers quickly and easily, maintaining and managing multiple contracts that may have changes over time. As there are additions, as there are upgrades, downgrades, renewals and non-renewals that translate into churn. These are all things that are going to be encompassed and embodied under contracts. And we'd be remiss if we didn't point out that going alongside all of this is going to be Intact's flexible and dynamic dimension structure. So as we're going through and capturing all this information, it's not simply just about the dollars and debits and credits that are hitting GL accounts, but it's giving you the detailed insight and analysis by any number of important dimensions to your business. So the contract certainly being one of them, the customers, the products, the geographies, the territories, your office locations and entities, all of those are things you're going to want to be able to slice and dice that data by. And that's what we're really looking at when we talk about Intact's contract solution here. And so as we go ahead and dive into what is a contract and how does it relate to that transition of ASC 606, we are talking about that one place that you're going to come back to time and again for your customers to manage your relationship with them financially. What products and services have they purchased from you? As they perform an add-in, it's not that you're going into a very transactional-based order management type of system and saying, well, I'm going to repeat an old process I've done over and over again, but in no way is it tied together to the original sale. This contract is, of course, the launch point for new sales, but it becomes the living, breathing working place for your financial relationship with your customers. So renewals are part of that, right? As products progress forward in the life cycle with your customer, the contracts are going to roll forward those renewals and aid you in that process. As like I said, things are either added or removed from the contract or from those renewals, all of that is rolling forward as well. So what we have is the contract, which is really broken into a number of parts. You can think about these first sections you're seeing. I mean, this arguably mirrors the paper of the contract itself, and so certainly capturing high-level terms, high-level criteria about your agreement and engagement with that customer. But then as we take a look at what goes underneath, we're going to start to capture those relevant details. So taking a look at the different contract lines or the products or services that have been sold. And as you might even glean from looking at my structure here, it's going to be flexible to say not everything in a contract is going to move together or move in nice linear fashions. You may have a number of agreements with your customers as to how you're going to bill and how they're going to pay. When are you going to do that? How do you do that differently for you know, one product or service over another and manage all that seamlessly? We'll also see and incorporate the notion of contract expenses. So part of the transition to 606 is a much tighter relationship between not only obviously the contract and the goods or services you provide, but the expenses you incur in securing that contract and spreading out and amortizing those expenses over the contract period as well. So the contract overall does certainly specify a number of key elements that we'll go ahead and leverage over time, and some things we'll come back to. But what's really key is what goes on underneath the individual elements within a contract. And if we take a look at a few of those and some of the key pieces of it, as you are creating these contracts or having them fully integrated from your CRM solution like a Salesforce, so everything we're seeing here is certainly can be pushed through the Intact CRM integration, so that you're not even creating this in Intact as much as you're inheriting it into Intact, and that's putting your finance folks in the role of review, amend, and approve, much more so than recreate and error check their own work on that side. But each individual element is identified for some key attributes of it. So of course we're going to identify the unique products or services that were sold. But as you go ahead and peruse the screen, you'll see a few key attributes to it. Vijay talked a lot about the reporting and you know, the transition to 606 deals a lot with typical financial and GAAP reporting, but there's also those SaaS metrics that are so key to folks, and being able to track products as new or as add-ons, being able to tie that in with a renewal process for those pieces that do move forward and you want to be able to continually gain insight to. Intact is managing those all underneath this contracts umbrella. Flexibility in the billing cycle, whether you're billing fixed prices for things like software products or other intangibles, whether you're billing quantity-based items for measurements of your contracts that might be based on some level of usage, number of transactions your customers process through your system, number of however much storage somebody might be using, number of users, et cetera, that might come in and out. Flexible, configurable billing templates to go along with those methods. Those billing templates being combinations of linear and nonlinear. It's always great, obviously, if we can bill everything up front and get the cash in the door, but not every customer has the means to pay us that way. Sometimes we need to get into monthly or quarterly agreements. Sometimes we need to get into agreements that aren't even linear in that way. We make agreements based on dates and percentages and other splits. Intact is able to take the amounts for those invoicings, turn them around within contracts into unique billing schedules for each individual line item of a contract, and then the invoicing engine obviously pulling all those things together that appear for billing at the same time to that customer. Where you start to see the 606 piece really take life is down here in the revenue area, and what is small on screen and simple on screen is extremely powerful behind the scenes. In the case of a software product like we have here, might not be such a difference between old and new. Beyond the scope of talking about identifying individual performance obligations, as Vijay mentioned earlier, right? So breaking out the discrete elements of it, but recognition between the two for certain products and services might not vary, and that's fine. We can have them move along the same path. Intact will still go ahead and track that for you and say, when I have a product that is being spread out over the life of the contract, what should that recognition schedule look like, and how and when should that post to the ledger? Handling things like prorations for shortened periods, either at the start or the end or both, giving you flexibility in between to either straight line that or look at true amounts per period. So a software product like this may have a setup that doesn't really greatly differentiate itself from a standpoint of ASC 606, because it's not going to be a key driver to that transition piece, but it doesn't mean we don't need to still obviously account for it. If we take a deeper dive into the 606 transition itself, it might be more of those other elements that come along with your contract and subscriptions, some of those one-time fees or services, or those things that tend to not move forward with the contract or move at a different pace. Now is where we start to get into different capabilities around not only perhaps the invoicing and renewability that might be different for something like a service or a one-time fee, but starting to say, and you know what, in the current world of RevRec, or what I've just simply labeled as old, right, old versus new, you know, you can call it 605 or 606, terminology is up to you. But we might say current guidance lets us recognize this service over the time period in which we're going to deliver it, and we expect to deliver it between the start of contract and ending on the 31st of next year. That's going to translate taking that amount of the booking and the amount of revenue we're ultimately going to earn and recognizing it along one path. However, under the future guidance of 606, we might need to say, well, even though we're going to finish in January, we need to recognize that out over the term. So now Schedule 2 is going ahead and tracking that same dollar amount, but to a different cadence for revenue. The important thing here is Intact has these schedules, it's managing these schedules, and more importantly, it's actually posting and recording all of these individual values into a unique set of books. So Intact as a multi-dimensional system is also a multi-book system. It allows us to keep track of more than one set of records and then allow you to create and build and define the reporting behind those accordingly. So each different element of your contracts as they come in are being assigned to these different features and functions and templates and capabilities for how are you going to recognize, how are you going to invoice, are you or are you not going to renew, how are you going to classify it from MRR or an MRR perspective as add-on or new. You think about a lot of perhaps your current working environments today and a lot of the customers we speak about, what's here on one screen is multiple spreadsheets or multiple tabs of a spreadsheet, and I'm continually going back and updating them. We're talking about having one place, one single source of truth within Intact to create and manage these components. And it's not just a one-time event, right? If we were to take a look at any of these schedules, for example, these are editable and modifiable over time. So if we were to find that these service engagements somehow was slowed down or moved or extended, we might need to make modifications to these revenue schedules over time. You may go ahead and need to do things like put an entire contract or contract element on hold or cancel it. Behind the scenes with that may come a lot of things other than just saying, well, it's no longer active, but what about all the accounting and the automations? All of that is built into Intact, all of that across both old and new revenue guidance to give you compliance to both 605 and 606. If we take this type of reporting element and take a look at it from a reporting standpoint, what we're talking about in that dual guidance is being able to look at not just the discrete elements about revenue and deferred revenue and how am I performing in this contract, but being able to do that simultaneously under both methods, right? Legacy guidance, 606 guidance, how would I be performing and tracking? So we might see a differentiation between the amounts that occur in those two places. You also you may note here that we're tracking to a whole other level of detail that frankly most don't, but is also critical to the transition to 606, is the movements between unbilled, billed, and paid. Really an overlooked part of the guidance, we think, is this emphasis on contract assets and contract liabilities, and this movement from billed transactions to paid transactions as defining contract liabilities. So being able to separate that out is critical, and the key part, as we'll see, is Intact is doing that for you. It's all part of that contract automation to go ahead and separate billed, unbilled, paid, and still maintain that dual reporting, legacy guidance 606. The importance of this dual book, and it's not just a report like you see here on screen in terms of profit and loss, but as you start to think about what's going to happen to those folks who aren't using an Intact contract billing and revenue management solution at the date of their transition, not only do you need to go back and obviously figure out all those numbers, but you need to rework your financials, right? How would the cutover impact my balance sheet? How am I going to establish a revised deferred revenue amount? How am I going to establish a new, unbilled, an unbilled element of it, because that's going to be critical to capturing and managing that revenue under different methods. These are all accounting functions that are going to have to be done at that point in time and verified and under a time crunch, whereas in Intact we're simply going to say, you know what, up until our change in reporting, this is our primary source of our reports for revenue and AR and so on related to our contracts. And at the date of switching, we simply are going to leave this one behind and do all of our reporting now based off of the go-forward book. And so all of those accounting entries are now automated for you. If we come back and take a look at how some of those items move, and then we'll see some other subsequent reporting. We've obviously established our contract. Sorry, I have multiple tabs open here. We've established our contract, right? We have all of our different elements to it. There's a few other things we might need to do from an automation standpoint with this. One is Vijay talked about MEA bundling. So if you are an organization that has to go ahead and subject yourselves to multi-element arrangement, revenue allocations, and the like, this is all built into contracts as well, and still taking into account, does it apply to Journal 1, Journal 2, old revenue, new revenue, and such. You'll also note it's a process that I can do more than once. So I'm adding an allocation that I might perform, at signing, and I may go ahead and say, great, these products all need to be bundled together. Looking at some basis that you've provided to Intact, it's going to go ahead and take a look and tell you what your multi-element arrangement allocation might look like. So my sale price, if I go ahead and cascade this window properly, down below, $37,650, $14,000, $12,000, that's how my customer wants to see their invoice, but my revenue spread might be different. I may need to move dollar amounts around based on what I did from a discounting perspective and so on. And so this may go ahead and alter those revenue amounts that we spread, but still need to allow our customer to see the contracted amounts that they've agreed to for invoicing. So those automations built in and flowing through. I talked about that invoicing engine that brings all of these different components together. So we have 3 different elements on 3 different time schedules at different amounts. Well, as you're rolling through your month-end process and we say we're ready to go ahead and invoice for November, and we're going to go ahead and just focus in on that one contract we were looking at, what we're talking about is pulling those invoice amounts in. So Intact has automated the splits to say, what is this amount of revenue for this particular line 1, line 2, line 3, and you'll see they differ from the sale amount. So it's going ahead and taking a look at that schedule. That 18 to 825 came from the breakout of my template there. So as we're going out and querying Intact for what is to be invoiced, it's going to bring forward those amounts that are relevant to us and then make it quick and easy to turn around and transition this into an actual invoice. Simply pop that up, select the items to be billed, generate the invoice, and out pops our invoice that now can be printed, emailed, sent off to our customer. You have total control and flexibility over that as well. But then as the process rolls forward, right, we roll into December. Now we start to get into, what's coming up next and coming up in that time frame. Now suddenly we only have our monthly elements, the only thing left to be billed for its particular amount, and we continue to repeat that process. We're going to see very similar treatment for those revenue components as well, and then we'll even touch on the expenses shortly. But what do we have to recognize from a revenue standpoint as we're going ahead and moving throughout the month? And so if we take a look at the revenue recognition, may very much differ from the invoicing. And we're also going to have that split between Journal 1 and 2. So it's querying those revenue schedules. It's finding the amounts that are set to be recognized and allowing us to go ahead and continue to post those values to the ledger. If you want to automate that revenue posting so it just happens without you coming in here, that's just simply a checkbox on the setup that says if my revenue is ready to go, I don't need to go through this secondary review. But it does give you a nice bit of insight to the split between old and new revenues versus expenses, as we'll touch on shortly, and then simply being able to quickly post that to the ledger. These different functions, as I've gone through, I've simply been executing workflows. You haven't seen me go out to a spreadsheet and take data and import it and create journals and all of that. That financial information is all being tracked behind the scenes on your individual contracts, and what's important about that is we're giving you that insight without having to jump out and create other reports. It's right on the surface of the contract itself. What's the total value of my contract? How much have I billed? We didn't go through a cash receipt process in this session, but we'll see that we're unpaid and no cash amounts have been received. All of these things we've been doing, Intact has been working behind the scenes to do quite a bit for me in terms of financial analysis. So it's taking a look and saying, for all the different individual components under my current revenue guidance, what does that look like? And I can see that product by product even, see those movements between billed, unbilled, paid, accounts receivable, et cetera. All of these values are tracking through through the contract, giving me unique individual visibility to that contract under both methods. So Journal 1 and Journal 2 may have differing values for that. There's a full audit trail behind the scenes for everything that's gone on in Intact. And so while I talked about the fact that I haven't made any journal entries, Intact sure has gone ahead and done a lot of work on my behalf for that. So you'll note that event by event, Intact is going ahead and looking at the appropriate products and configuration for your contracts and determining what do I need to post to what accounts and based on what classification in the event, movements between unbilled, billed, paid, and so on. All of that translating out to detailed, in-depth financial analysis for you. Before I kind of leave the contract, it's important to talk about that one other element that also factors in, which is that expense detail. So another key piece of this, and it might not impact your customer-facing side of the transaction, but very important to the financial side of contract accounting, is the expense management piece. So not only am I able to track and manage what I sold and go ahead and add new elements to that over time, but I also may have expenditures I want to go ahead and incorporate into this. So perhaps we had some commissions. Yes.
If I may, before you get into the expense amortization too much, I had a question come in from the audience, and that has to do with reporting. Is it possible to report on billed and unbilled revenues by customer in addition to contract?
Absolutely. That goes towards that dimension concept. So when we would take a look, and we can just simply cascade our screen here, when we're taking a look at all of the individual transactions that happen up on an individual entry within Intact, it's bringing along those dimensions with it. And so some of them are inherent to the contract itself, like the customer, the product, the contract. But there may be others as well. You can associate, to different dimensions if you were departmentalizing or assigning to employees. And so because all of these entries are posting at all of these different levels, it makes it very easy for Intact to go ahead and allow you to build any level of customer-based reporting, whether it's customer profitability, detailed revenue by customer, by product. All of that becomes inherent to the solution and to the reporting capabilities of Intact.
Great, thank you.
Certainly. So if we come back to the expense side, it's going to follow along the same lines, that dimension, and I apologize for not calling that out because it is somewhat implied, but everything I'm doing for this contract, I'm therefore doing for that customer, and those become inherent dimensions to the transaction. As we take a look at commissions, that might bring, or expenses, I should say, that might bring some new elements to it. So we go ahead and say, great, we have a commission expense. We paid it to this employee on December 15th payroll, and it was in the amount of $1786.95 is what payroll worked out to be. Well, perhaps we want to go ahead and attribute that to the sales department. We want to attribute that to Jacob Coleman. We want to capture these additional dimensions. This is going to allow us to not only obviously report this commission value by contract, by customer, but now by department, by employee, by any other dimensions that are applicable. And you'll see again that dual treatment between old and new. So my ability to say, you know what, in the current world of expenses, I would simply recognize this in the month of December 2016. But under future guidance, I'm going to take that from the 15th to the end of the contract term or whatever else the guidance applies to you. This is going to do very much the same thing we saw on the revenue side. It's going to create dual schedules. It's going to allow us dual posting. It's therefore going to allow us dual reporting as well. And so as that goes ahead, creates and saves, we're going to see just exactly that. We now have a schedule for current guidance that is a one-time posting event of 100% of that amount in the month of December. But under future guidance now, we have the spread of that contract expense over the life of the contract in accordance with the current guidance. All of these things we've been talking about, we've seen some high-level reporting on the split between old and new that's out here, but a lot of your contract analysis is going to go beyond just the split of, current guidance versus future guidance, you're going to want a lot of other insight into these, and that breaks down in a couple of different ways. One might be detailed SaaS metrics, being able to break that down and boil that down to CMRR, or annualize that out to ARR, taking a look at churn, and all of that being automated by the Intact Digital Board Book. As these transactions come in, as they renew, Intact knows that status. A product that was renewable but not renewed becomes a churn product. And Intact's Contract Solutions intelligent to recognize that a given product didn't renew. Breaking things down into the lowest level components to allow you to look at your business on an annual basis or monthly basis. Using those dimensions to drive and drill into cost to acquire customer and all the other C's that come along with the 5 C's of SaaS reporting. We're also going to want to be able to forecast elements out, and that might be in summary or detail of different elements by customer, by product, by contract. So being able to look at and incorporate multiple levels of reporting into single visibility is key. If we take that forecasting piece a little bit further and we take a look at analyzing all of our individual contracts, all those different components can be easily brought together for different levels of insight, and this will also go back to the dimension question we had before. But being able to go ahead and view my revenue forecast, right, tapping into the details of all those individual schedules, being able to see that billing forecast, when am I going to invoice all those different customers and products, and taking it to another place that we don't find, frankly, most other folks go, which is the cash forecasting. When I bill it, when do I expect to get paid off of that? That's critical too. And then my renewals element as well. And as I mentioned, the dimension piece coming in up above, so if I want to view any of this by an individual customer, group, or cohorts of customers, categorized by certain types, certainly any and all of Intact's dimensions are available for you and your users to view, consume that data, because those dimensions are down there at the data level. So I want to thank you all for joining today. Hope you enjoyed the great information from Vijay, and then supported by Intact's contract accounting solution for the transition to 606. And I'll turn it back to Vijay for any closing thoughts, comments, or additional questions we might have.
Thanks, John. Everything that you saw there that John showed, again, driven off of the contract, which is the single source of truth driving the accounting, the billing, and the reporting, but also becoming the central notion and the central concept really in ASC 606. So as you think about making that transition, all of the automation that's driven off of that single source of the truth and contract, and making that as seamless as possible for you was something that we wanted to get done for finance teams in growing companies. There are a couple of questions. Before we get to those, I wanted to share a couple of additional resources. On our website, there's additional information about ASC 606, additional information about contract and revenue management. I invite you to take advantage of that. John, a couple questions that came in. We have time for a couple I wanted to send your way, and I'll provide a reminder a little later on surveys and CPE credits. John, the question was, does contract information need to be entered manually? We have a custom system for customer orders.
No, it does not need to be entered manually. That information can be imported or integrated from a CRM or other sales management solution just as well as it can be created manually.
Great, great. And then, John, I know you alluded to this during the course of your demonstration. Salesforce is one of those systems for which we have a pre-built integration. So just as a reminder, if you wanted to start your contract workflow in Salesforce and have it done, come over to Intact in an automated way for driving all the accounting and the billing and the reporting. You can do that as well. Speaking of billing, John had a billing question come through. Can Intact bill using tiered pricing schedules?
Yes, I did touch on quantity-based pricing, but I did neglect to mention that What goes behind that quantity-based could be feeds of values that go through some complex pricing, whether it's tiered or stepped or banded. So yes, our quantity-based pricing and billing capabilities come right along with the 606 compliance and other workflow attributes of contracts.
Great, great, thank you. And so what I wanted to do at this point, we have reached the top of the hour. A couple of reminders for those of you who are requesting CPE credit. You will get a survey that will you'll see as you log out of the WebEx event. Please provide all the information that's requested so that we can process your CPE credit for that. And so with that, on behalf of John, on behalf of Intact, I wanted to thank all of you for taking time out of your day to learn about how you can have the transition to ASC 606 be a streamlined process, and we wish you a great rest of the day. Thanks again.